So yesterday's false breakout attempt resulted in a move down towards that 72 to 75 support where buyers stepped in, and now heading into the open, how ES behaves at the 82.5 to 85.5 pre-market resistance is going to help us determine which side is being more dominant. Our short-term bias continues to be neutral because the market is still stuck within the recent range, but off the open, if sellers hold ES below 82.5 to 85.5, then that would signal continued weakness, and from there we can head back down into the 72.5 to 76 initial support zone. And if at that point in time we're continuing to see broad market weakness and sustained downside momentum, then there would be potential to expand the range lower into 63 to 66 and possibly even the support areas below. On the upside, a breakout above pre-market resistance would signal short-term stability and bring the 87.75 to 89 zone into play, as well as the initial resistance zone at 91.5 to 94, where sellers can be active on first test. And then beyond that, we have resistance at 96.75 to 98, followed by the all-time high at 3100 to 3102. And again, sellers can be active there as well, and we would need to see broad market strength and some decent and sustained upside momentum in order for the market to put in a breakout to a fresh all-time high. So with our short-term bias being neutral, we have to be flexible and open to the market moving in either direction, but the bigger pattern that we saw yesterday was that of a failed or false breakout that resulted in a test of that 72 to 75 support area, and buyers stepped in a little bit ahead of it. And now going forward, how ES behaves at 82.5 to 85.5 is going to be important. And if we fail there, then it opens the door for range expansion to the downside. And if we take that area out, then we can continue balancing in the recent range. Or in that case, the market may just have to test better resistance in order to find sellers.